Okay, I kind of wanted to give people a little bit of background about what we're going to talk about today, frame the conversation a little bit so everybody knows what to expect. So we're going to go into brief intros and backgrounds very quickly. Then I think for the audience, obviously they're very interested in kind of what Bakkt is doing. And I wanted to focus on what they're doing today, but more importantly, what they're going to be doing further down the line, because I think there's some exciting things that they're working on that hopefully Adam will be able to shed some light on. And then after that, we'll leave somewhere between 15 and 20 minutes for Q&A. For most of these things, I feel like people come in with some premonitions or things that they've read that they'd like people like Adam to kind of either justify or answer for. And so we wanted to leave ample time for that. So with that said, I'd love to get your background, Adam.
Yeah, so morning everyone. Very happy to be here and awesome to see this this venue kind of filled with this crowd moving into the space. It's very optimistic for what we're building at Bakkt. Very quickly, my background, prior to joining Bakkt, I joined about a year ago. I was at Coinbase for 5 years. I was one of the earlier employees there. I think I was number 5. So shortly after Olaf was there and Charlie Lee and a few others. Spent 5 years at Coinbase with a front row seat into kind of the growth and maturity of the crypto space. It was awesome. It was also incredibly overwhelming. 18 hours a day, 6 days a week, as most kind of startups are. Before Coinbase, I had your very standard transition. I was an Air Force officer, so I used to test experimental aircraft for the Air Force, and then naturally moved right into crypto, like many people do. But it was somewhat similar in that you're solving problems that have never been solved before. They're multifunctional. It's technology and engineering at the heart of it, which is a lot of what I did in the Air Force as well. So it's been a wild ride so far, and I'm very happy to be here.
Great. I did not test aircrafts. But so my brief background is I started out my career at a company called Second Market. I spent about 7 years there. Second Market turned into Digital Currency Group. I helped build Genesis Trading and their broker-dealer there. And most recently, I was COO of DRW's crypto arm called Cumberland, helping to build that practice and provide liquidity to the market, such as places like Coinbase and other parties. And most recently founded, with 2 of my partners, CMS Holdings. CMS is a principal investment firm in the crypto space. We manage our own capital, we take no outside capital, and I'm happy to announce that we are also GP investors in Multicoin. So with that said, I'd love to get kind of a company intro for those that might not be familiar with Bakkt and kind of lead in with that.
Yeah, I'm happy to. I think the number one question I get is, what is Bakkt? Are you guys a cryptocurrency exchange? Are you a custodian? Are you a Bitcoin payment processor for Starbucks? Are you doing something completely different? And the honest answer is we're pretty much all of those. But at our core, Bakkt is a custodian. What we've built, and I'll talk a little bit about today, is we believe it's the first truly enterprise-grade custodial solution that can serve institutions by protecting their digital assets. And we think that's a big deal. So Bakkt has been around for much more than a year that I've been there. It's actually been being worked on at our parent company, Intercontinental Exchange, for coming up on 3 years now. So I think a lot of people kind of look and go, you haven't really launched a product other than this futures contract, and you talk about Starbucks, what's going on? We're not your typical startup. We are not a group of a dozen folks hammered together in one small loft apartment in Soma trying to bang out an app and get it to market. It's just not the approach. We're much more of a subsidiary of a Fortune 500 company. Actually, that's exactly what we are. So I'll spend a lot of time talking about the custody solution we've built and why we think it's really important, not just for us as a business, but why we think it's important for the space and how we'll see more capital move in, but also greater utility of digital assets, which we all believe at Bakkt is the core underpinning investment thesis of crypto. That crypto has value because there's a belief it will have future utility. Whether that future utility is just storing it, so more of like a store of value, or it's actually payments or microtransactions or something completely different, I think it's predicated on a belief that crypto will be used for something. But Bakkt itself, we're about 100 full-time employees. We're spread across 3 offices, Chicago, here in New York, and down in Atlanta. We are one of the subs of Intercontinental Exchange. And for those that haven't heard of ICE or Intercontinental Exchange, it's one of the world's largest exchange and clearinghouse operators in the world. So they operate the New York Stock Exchange just right across the street from us, and they own and operate about 12 other exchanges and 6 clearinghouses. So what's great is I look at Bakkt as one part of their portfolio. We sit right alongside, although much smaller than the New York Stock Exchange, ICE Futures US, ICE Futures Singapore, so on and so forth. So you can think about us as a separate, independent, autonomous company, but we're kind of part of the ICE family. And that's really important because we get to pull all that infrastructure, we get to pull all those security programs and economies of scale that your typical startup can't.
So that's interesting. You touched on your time at Coinbase, being an early employee there. I wanted to understand like how that transition was going to ICE and kind of the differences that you saw being an early employee at Coinbase to now being at a larger institution that's backed by even bigger institution, and what that does for Bakkt.
I think the biggest transition was actually moving from San Francisco to New York. I was unprepared for the city, is the way to put it. But a lot of the same values that Coinbase held, this idea of having structured, logical decision-making, an engineering-first mentality, a bias for execution and shipping product and solving real problems for people, it's the same cultural value of ICE. ICE is a Fortune 500 company. It's got 50 offices around the world with 6,000 employees, but it's only been around for about 20 years. And because it's still somewhat young, it carries that sense of vibrancy. It doesn't have a bureaucratic element to it. And that's something that I found incredibly motivating moving between Coinbase and ICE/Bakkt. One of the main reasons I moved, though, is I think that we absolutely need the companies like ICE, like Facebook, that are willing to venture into this kind of nascent digital asset universe and put their reputation and their resources behind these products. So a big part of my personal reason wanting to move from Coinbase to ICE is that I didn't think cryptocurrency would necessarily be as successful a decade out from now unless we saw companies like ICE build products and do so without getting hacked, with understanding the technology and how it can solve problems, but maybe in areas where it's not so well applied. So a big part of my personal reason was basically to help accelerate and develop what ICE had already built, that custody solution. And by and large, that's what I wake up every day and think about, is how are we safeguarding and protecting our customers' funds? And as a regulated New York trust company, we have independent oversight and a fiduciary responsibility to our customers to do so. But protecting cryptographic material and private keys is just very different than what traditional custodians are used to. So I found it was a real opportunity for ICE to say, we're going to take what we do best in the world, which is operating markets, allowing trading and price discovery to occur, and we are going to bring crypto inside of that. By bringing it inside of that environment, though, what they needed to build was a custodian. They didn't need to build a new exchange. They already operate federally regulated exchanges around the world. The New York Stock Exchange, ICE Futures US, ICE Futures Europe, and Singapore. So they said, in order for us to be able to trade this asset, we have to be able to store it. And we kind of looked on the market and said, we don't trust any of the current digital asset custodians. Not that because what they build is inherently unsafe, but it doesn't meet the caliber of what we as a Fortune 500 company expect. So I think a great example of kind of dog-fooding our product, or maybe kind of what Amazon did with AWS, ICE built custody in-house from the ground up over the course of 2 years. And right now we're in that process of operating that for our business. But in the next couple of days, we're going to be making a pretty big announcement around how we see the future of institutional custody emerging and how we can take that product and help scale it to other businesses, other partners in the space, not to compete with them, but to enable them to do what they do best. So working with incumbents to say, you're already an exchange or you're already a prime broker. How can we help accelerate your business by abstracting away the complexity of storing digital assets? Because at our heart, that's what Bakkt does best.
Yeah, I think it's interesting because a lot of people that read the news about Bakkt, and I did it as well, was when you read about it, you're like, okay, Bakkt is just another crypto exchange that's developing out there, much like I feel like every single week there's a new crypto exchange that's developing. You mentioned that like custody is a very core piece of infrastructure for Bakkt. I'd like to discuss kind of what the structure of Bakkt is, because there's this idea that in crypto, many of the exchanges and companies that are built out there have been built very vertically, right? Vertically integrated. Whereas I think you guys are taking a little bit different approach on that. So do you want to just touch on that a little bit?
Yeah, I'd like to say Bakkt is probably more closely to a horizontal play. So if you kind of look at the modern financial system, most businesses and most parts of that financial structure tend to do one function really well. They may do that function for a couple different asset classes, but that tends to be their core function. We're taking that approach at Bakkt more so than being kind of completely vertically integrated. So when you look at the cryptocurrency spot markets, they tend to be a front end, so at like an independent software vendor, an ISV, or an introducing broker in the incumbent world. But they tend to be a matching engine, an exchange as well. And they tend to be a clearinghouse, although because they're pre-funded and fully collateralized, there's very little risk, if any. But they tend to be these vertically integrated monolithic structures, which makes sense for the early days of crypto because you couldn't go find a custodian. You couldn't go, borrow someone else's matching engine. But personally, we feel that it's more important to kind of offer this separation between church and state. And by doing one thing and doing one thing really well for Bakkt, that's custody, we then enable other businesses to do what they do really well, a matching engine, whether you're the New York Stock Exchange that theoretically one day could be trading security tokens, or whether you're ICE Futures US now offering a daily and a monthly physically delivered Bitcoin future. What's great about our product is we abstract away all that complexity because when they work with us, all they see is an internal database of customer balances. Bakkt, or more specifically the Bakkt warehouse, our custodian, that's that piece that's regulated by New York. We're the ones that have to worry about hard forks, airdrops, double spends, block confirmation times, supporting new blockchains as we think about adding new assets to that custody solution. So we really like to think of ourselves more as a horizontal play, and I almost like to look at ICE as our first big customer, ICE Futures US, the derivatives exchange that we're facilitating the futures trading with. But hopefully we'll see other exchanges in the space say, hey, if they can offer that, so can we, and Bakkt will be that custody provider that helps work with them.
Yeah, I think I tend to share that view of kind of like a separate structure, a vertical play of how things are, because traditionally exchanges or even crypto companies, they want to be everything to everyone. And in the traditional, in the equities world, right, those responsibilities are broken up. Whether it's, you have the regional brokerages that are, working with their clients and retail investors, then those orders then flow to market makers such as DRW and other folks like that, or the Virtus of the world. And then they ultimately, or maybe they don't, end up at the exchange. And so I think that division of labor within crypto is starting to get built out. Obviously, you guys have a leg up there. So we talked about the structure a little bit. And I think, people are very interested in kind of the first product that you guys launched and how that's doing. Do you want to touch upon that a little bit?
Yeah, so back in September, we launched the world's first fully regulated end-to-end marketplace for the price discovery of Bitcoin. And what that specific contract was both a daily and monthly physically delivered Bitcoin future. And the reason why we say it was a big deal and why it was the first fully regulated marketplace is that up to now, price discovery happened largely on unregulated platforms. So the spot markets, and look, I've got a lot of love for them. I ran Coinbase's exchange for the better part of 2.5 years, and those are incredibly important parts of the cryptocurrency infrastructure. But I think in order for institutions with a capital I, for them to start feeling comfortable moving into the space, much like other asset classes over the years, that marketplace has to mature, it has to develop, not just from technology and performance, but from regulatory clarity. So Jeff Sprecher, the chairman and CEO of ICE, had a very simple but a really brilliant idea about 3 years ago. And he said, look, if the cryptocurrency spot markets are unregulated, and effectively all commodity spot markets are unregulated, he said the way in which to create a regulated marketplace for Bitcoin is to create a future. And not just a cash-settled future, but a physically delivered future. And the reason why that's important is if you look at cash-settled futures, it's effectively a bet on the price of Bitcoin at the expiry of the contract. Well, who decides what the price of Bitcoin is? Most cash-settled futures marketplaces use an index, and that index is pulled from the spot market's market data. But again, that spot market data is not regulated. I would say it effectively lacks integrity. And I'm sure by now everyone's read the reports that 90 to 95% of all spot market data is fabricated. It's fraudulent, it's manipulated, and 100% of spot market data is all self-reported. So there is no independent oversight. There are no regulatory agencies looking at the matching engine of these onshore and offshore spot markets to ensure that there's not spoofing and wash trading and all the bad things that can happen. Now, I give a lot of credit to the good cryptocurrency spot markets that are out there trying to be compliant, trying to drive regulatory clarity where they can, but to date, none of them are still regulated exchanges. They're unregulated spot markets, not exchanges. So the idea of creating a physically delivered Bitcoin future means that upon expiry, there is no index price we look to. One party provides Bitcoin and the other side receives it, effectively just like a spot market does on the spot of the trade. With a future, it'll happen at the end of the day or at the end of the month, depending on the contract you're trading. So we think that's really important because now we have market data that has integrity. We have a fully regulated marketplace. So as institutions or other trading participants want to move into the space, we think that offers us a great opportunity to help them feel safe and trusted. And ultimately, the customers we're trying to attract want trust. They want third parties. They're not interested in self-custody. They're not jumping to trade on decentralized exchanges. I think that's a very important part of the value prop that crypto is bringing. But what Bakkt is trying to do is serve incumbent traditional trading participants, not the kind of next gen or new wave. And it's not an either or. It needs both for the space to be successful. So we look at Bakkt as not being competitive, not trying to necessarily compete with the cryptocurrency spot markets, but being accretive, being additive to the space, and hopefully growing the whole pie for everyone.
Yeah, I know that was a big concern in terms of some of the cash-settled futures that were launched. Obviously, they kind of broke the mold and they got out there, but when we're looking out on the desk, we said, well, there's a lot of risk here in terms of when it goes into expiry, in terms of the different mechanisms at which they settle, whether it's an index price or an auction price or something like that. It presented a ton of risk for our desk, and so we said naturally, well, physically settled futures is the way to go, and we understood that process for whoever was going to provide or whatever marketplace was going to go down that road was going to be difficult. And why it was going to be difficult was we thought it'd be kind of on the regulatory side of things in terms of trying to educate and inform kind of policymakers and people who are sitting in those seats to understand why this is a better product. Can you talk a little bit about how those discussions went, right? From early on till now, obviously you guys were able to launch, and but how was that transition? Because obviously cash settled futures got out there first, and you guys were introducing something more novel, but something that is traditional.
Yeah, it's happy to talk about it. It's always kind of a sensitive area when you bring in kind of the regulatory aspect, but the short of it is, what we built in-house was that custody solution, because without custody, we couldn't offer the physical delivery of contracts. And I think ICE takes an approach that I really agree with, which is we're here not just to cooperate with regulators, but to educate, to partner, to even kind of provide advocacy for the space. And those conversations take time. I know the cryptocurrency market and most startups want to move fast and break things. They want to break the mold. And we thought, look, it's more important to do it right than it is to do it quickly. And our CEO at Bakkt, Kelly Loeffler, wrote a post around, this is a marathon, not a sprint. And of course it was tempting to say, well, we're going to launch unregulated custody because it's already built, and we're going to self-certify contracts and find a way to force this through. And we said, that does not bring trust to the space. That does not grow the comfort level of regulators. It's more important to take the time and do it right. So when we launched our contract, we did so in a way that we thought was entirely above board, one that we could hang our hat on, that we were very proud of, and we kind of wanted to prove to the industry, look, if we can do it, anyone can do it. It takes time, it takes hard work. You have to create enterprise risk management programs. You have to have disaster recovery and business continuity. A lot of things that are not necessarily end customer product facing. But by doing that, we're able to get a New York trust license in record time because we had our ducks in a row and regulators knew that we wanted to do things the right way. So while we got out a little bit later than we would have liked, I think we got out the right product. I think the other really important thing to touch around this contract is it's not on a separate exchange. It's not pre-funded and fully collateralized. It's actually capitally efficient, and it looks like every other derivative contract that you can trade on ICE or CME. It's in the same guarantee fund as all the energy and credit and other commodity derivatives that are traded on ICE. So what was great is we didn't try to do things differently and uniquely and put it on an island. We said we're going to bring Bitcoin and then other digital assets exactly into the kind of existing structure. We're not going to do things any differently than we do for any other product. But to do that and do it the right way, it took a little bit longer.
Yeah, and I know the media, once the futures had launched, everybody was on top of, well, the trading volumes and metrics and things like that. Do you want to chat a little bit about kind of how that process works and how the product has been accepted, or onboarding new customers and things like that, and different metrics that you guys are looking at?
Yeah, I think it's funny because if another company launched an app and after the first day they only had 100 customers, they wouldn't be, claimed to be a failure. But for some reason, the expectations were so unreasonably high for institutional capital to come flooding in on day one with the Bakkt contract. That was never our perspective. This capital that's going to move into the space is going to do so methodically and slowly and conservatively. It's sophisticated, smart money. It's not people rushing in a mad frenzy to buy Bitcoin. So our approach was get the product out, and there's a term we like to use at Bakkt called chop wood. It's this idea of put your head down and just every day do the hard work it takes to onboard customers, to grow the product, to add new assets, to solve problems. And we've got a couple of our folks from the Bakkt team in the Bakkt here that do that every day. They wake up and they explain to customers and really institutions that are looking at this asset class, here's why you can start to gain comfort in what we've built. So I think over the first couple weeks of our contract, we were averaging less than 1% of market share. Yesterday, we're up into double digits now, over 10%. So someone said something in a press article that said, this will be a trickle and then a flood. And I generally believe that's right. What we're going to see is, like this market, it's happened over the past 5 to 8 years. It's kind of very cyclical. It kind of slow and steady, and that's when all the real work gets done. Products are being built. People have their head down chopping wood. And for whatever reason, there's some catalyst that sets off kind of the next bull market. We saw the most prominent one back in 2017, but I saw one in 2013 when I first joined Coinbase, and we saw them in 2011 and even before that. So at Bakkt, what we're focused on is we are an infrastructure provider. Let's make sure we have the infrastructure in place so when that next catalyst happens, and who knows what it is, there is a easy, fully regulated on-ramp for that capital to move in. And what we're trying to do now is work with institutions and say, kick the tires now, connect to the pipes, be ready. So if and when that time comes where you do want to start moving some portion of your portfolio into this asset class, or you do need to be able to have kind of immediate liquidity, you can do so on a regulated platform. So, we're happy to see growing volume in our futures contracts, and we think a lot of that work is also going to be a lot of that progress is also going to be buoyed by some new products we have coming to market. So we announced a couple weeks ago we're going to launch options on our monthly futures contracts in December. So we think that'll potentially be a first for the space, the first regulated options on futures. We've also talked about launching a cash-settled contract and how we might do that later this year too. And we recognize that it's not, everyone likes to kind of compete between things. Hey, it's either this or that, it's A or B. And we think, like most asset classes, it's going to be a variety of execution platforms. It's going to be a handful of different contracts. So we think having futures, both physical and cash, having options on that, having truly enterprise-grade custody, whether or not you want to trade on our platform or if you just want to store Bitcoin or in the future other assets with us. Those are all parts of the market development that are then slowly but surely reflected in not just our market share and trading volume, but the entire trading volume for the industry.
Yeah, I think the crypto markets conditioned consumers to feel like everything needs to be fast, free, and instant, right? And so when people see different metrics and things aren't growing per se, that they tend to jump all over it. Obviously, there's an onboarding process that many of your clients take on that is very akin to whether you're a vendor for any financial services firm or a bank or something like that. What are some of the questions that these institutions come in with? And I'm sure there are probably some very simple ones, but probably most of the institutions have teams or analysts that are looking that have been looking into crypto for quite some time. So I'm sure you're getting some more detailed questions about kind of Bakkt and things like that. What are some of those questions?
A lot of those questions are ones I won't bore you all with. They tend to be, help me understand the delivery cycle. So if I actually take this contract to delivery, how long till I get my Bitcoin, or when do I have to provide it? It's a lot of legal and compliance questions around the structure of the entity and bankruptcy remoteness and things like that, it's 90% of the actual problems that are being solved are not, show us how you're using pay-to-script hash in a multi-sig address that can programmatically ensure that this only goes to a whitelisted IP address. Like, those boxes are checked. That security threshold is being met. The real challenges that I think are being solved right now tend to be how legal and compliance and regulatory boxes are being approached for an asset that effectively has never looked like anything that's come before. A lot of people call Bitcoin, and I tend to agree, akin to a digital bearer bond. That if you own that private key, you own that asset. And there's a lot of challenges when customers start saying, well, how do I move my asset into your warehouse? What if I want to get it off? What if that asset has come 500 blocks before associated with the dark net market Bitcoin that got commingled in the same address? How do we solve for that from a compliance perspective? How do we screen for it? So a lot of the questions they're not cutting edge technology questions. They're kind of that chopping wood type work that we need to do. But so what we've really been focused on, and why I think ICE and Bakkt has a great opportunity to help break this market open, is we're not trying to do the work of connecting new trading participants to a brand new exchange. We're generally going after all of ICE's customers that are already trading credit and energy and cocoa and cotton and orange juice and all the different commodities on their market. And we're saying, if you already access ICE Futures US, this is just a new ticker symbol for a contract you can trade. The incremental work is minimal compared to what it might take to stand up an entirely new exchange, buoyed by the fact that it's the same clearinghouse guarantee fund. So again, I think one big difference and why it's taken us longer to onboard customers is, unlike cryptocurrency spot markets that kind of allow every customer, institution or retail, access to the same pool of liquidity with direct market access, that's not our product. Retail can get access to it, but they have to go through a broker. Think Interactive Brokers or TD Ameritrade or Charles Schwab. Those are the brokers that allow retail access. We're not onboarding retail customers into ICE Futures US. The option for institutions is they can have direct market access, or they can, where they're trading via FIX or REST APIs. They also have the opportunity to kind of go through trading front ends that they use. So like Bloomberg would be a good example. So part of our job is, we've got the market up and running, we've got the contracts and the custody element there. Now we have to get all the other stakeholders on board, the ISVs that aren't yet supporting it, the other regulated brokers so retail can trade this contract. So it really becomes part of an infrastructure maturity and connectivity question, and that's a lot of the work we're doing as well.
Got it. You touched on options, which I think the market was very excited about. Because it's a new product, obviously, that you guys are launching, but for like the U.S. consumer base. What's next, right? We touched on options. There's a buzz around kind of the collaboration you guys are doing with Starbucks and kind of the consumer angle of that. So do you want to just chat a little bit about kind of what you guys are excited about next for 2020?
Yeah, so I probably should have started with this, but let me see if I can remember it. We spent a lot of time at Bakkt working on our mission. So it can be used pretty poorly, and it just becomes like, I don't know, a poster on the wall that people walk by and ignore. Or you can spend, I believe, a real amount of time trying to get it right and then consciously resolve business questions and kind of resource allocation based on supporting that mission. And we did the latter at Bakkt. So our mission at Bakkt is to expand access to the global economy by building trust in and providing utility for digital assets. So we look at both of those things. Building trust in and providing utility for is fundamental for us being successful. When it comes to speculation, so investment and trading and people moving money into this asset class, we think we're building trust by providing that regulated custodian. So having independent oversight by the Department of Financial Services here in New York, having those contracts traded on a federally regulated by the CFTC exchange. So that trust comes with being a third party, having independent oversight, making it look and feel exactly like every other asset class that institutions trade. But the flip side of that is, how do we develop utility for? And sure, you can make a small argument that crypto is going to serve as a store of value, so just being able to buy it and store it safely is providing utility. And that may be true, but I'm not personally a huge believer that if that's the only use case, the size of the pie is really big enough to support the companies and the capital that could potentially move into this space. So at Bakkt, what's really cool is we have an entirely separate side or second side of our business that's there trying to build products that solve real problems for real people. And this has been most notably kind of captured through the Starbucks partnership, which is a very important partnership, but only one part of the product that we're building. So about a week or two ago, we've got a chief product officer whose name's Mike Blandina, 30-year veteran of the payment space, head of engineering at for PayPal's backend, head of engineering at Google Wallet, kind of lives and breathes that Valley mentality of building payments products in kind of a retail consumer-driven mindset. We were very lucky to convince him to pick up and move to Atlanta and join Bakkt. And he and his team have been working for, again, well over a year, probably going on closer to 2 years now, building from the ground up a consumer and merchant-focused application that's designed to break down barriers between different digital assets and kind of provide value to different stakeholders. So consumers may find greater utility in kind of the ability to move in and out of different digital assets. Merchants may find a lower cost of payment. But what we're trying to do is say, how do we actually solve problems for people? And allowing people just to kind of speculate and trade, and when I say people, I mean retail consumers. Allowing those retail users to speculate and trade on crypto is probably not the utility we're going for. Also, others have already done that really darn well. I think Coinbase has done a pretty good job of being able to allow people a safe, easy, trusted way to kind of buy, sell, and store crypto. So what we're looking to do is kind of expand that and say, how do we help people start to use crypto? And maybe not use it in a way that you're going to walk into every Starbucks from now on and buy your coffee with Bitcoin, because while there's some benefit there for the merchant on lower transaction fees, I still haven't seen a super compelling reason for every consumer, every retail customer to want to do that. But we are working on a product that we're going to launch in the first half of next year. This is kind of the blog post that went out a couple of weeks ago, shares a bit of light on that we're really excited to get in the hands of kind of hopefully millions of customers by the end of 2020.
That's your payments vision blog post?
That's right. We talked around, Mike Blandina wrote that blog post around what's the vision of payments at Bakkt. And I think it goes beyond just paying. It's how do you safely store, transact, spend, and convert between different digital assets. And we have this fundamental belief that digital assets are not new. I know the crypto community, myself included, likes to say crypto is a digital asset and it's kind of this new asset class. I think digital assets have been around for decades. So if anyone uses PayPal or Venmo, your dollar balance in your wallet, in your Venmo wallet, to me is a digital asset. The securities that maybe you store on TD Ameritrade or Robinhood, those are digital assets as well. The loyalty points, like your Hilton points or your Marriott Bonvoy points, those are digital assets. These all represent different forms of value that you don't have in an analog format, right? It's not a piece of paper or a bill in your wallet. It's a digital asset that represents value. We're trying to find a way to say, how do we stop siloing these different digital assets and allow people to more freely use and convert between them?
Yeah, I'm sure consumers all around the world have that value locked up in terms of either they've forgotten about it or maybe they don't have enough points for the next tier of whatever they're doing and things like that. So I think opening that up is going to be really important. And on that note, I think we'd love to open it up to Q&A if anybody has any questions in the crowd or in the Telegram chat.
Sorry, a little tardy on the mic. We got one from the Telegram chat for Adam. Adam, do you think that Bakkt will advance beyond BTC in the future and offer different digital assets?
Yes, absolutely. So when you look at the amount of time and investment that we've built from building our Bitcoin custodian from the ground up, we did not do so in a myopic, it's Bitcoin or bust. We have a very agnostic approach to digital assets. In the same way that I don't think we should be picking winners or losers on the New York Stock Exchange, the NYSE kind of has listing and delisting rules, and if you meet these level of attributes, we're going to support you. At Bakkt, we're taking a very similar approach. Now, we put out like kind of a very brief, what's our digital asset listing policy for custody up on our website about a month ago. And it talks about things around security and reliability and customer demand and regulatory clarity, and all those matter. But we are certainly not going to be a Bitcoin-only custodian. We've started there for a couple reasons. One is Bitcoin has the largest market cap. It's got the most kind of capital already inside and interest for trading, and then we think that's important. The second one is it's also, well, up to about a few weeks ago, the only crypto that was clearly defined as a commodity. And a limitation of trading on a commodities futures exchange is the asset you're creating a future on has to be a commodity. So we were confident that Bitcoin was a commodity that had good clarity, so we offered Bitcoin futures. Just a few weeks ago, Chairman Heath Tarbert of the CFTC kind of definitively, alongside this SEC, declared Ether a commodity. So that opens up a great opportunity there. But we will store many more assets than we allow futures trading on. That's just kind of the nature of our business. We as a custodian want to be agnostic, store as much as we can within reason, and then allow the different exchanges or the different partners that we're working with to kind of pick and choose what they want to offer. That's kind of less up to us to decide. So short answer, yes, we're going to add more than Bitcoin.
And are you getting, with the institutions with the capital I, are they asking for different types of, let's call it coins or tokens? Or is it mainly focused on Bitcoin because obviously that's the largest market cap, that's the most quote unquote liquid and things like that? Or are you actually getting questions of more tail end kind of coins?
It depends on who we're talking to. So if we're talking to participants that are kind of new to the space and they've said, look, I've never traded crypto before, but your product is starting to give me the avenue where I can do that, they're asking about Bitcoin. That's what they've read about, that's what has pretty good clarity, that's where their interest lies. Now, if we're talking to other kind of more crypto-first institutions, oftentimes they're already going to have a basket of assets. And they may say, can I store not just Bitcoin, but a lot of my ERC20 tokens with you, or kind of assets from new blockchains? And I think they recognize the value of what the Bakkt warehouse, our custodian, can offer. So depending on who we're talking to, there's kind of different levels of interest for the kind of long tail of crypto assets. So we kind of say, look, we want to support all customers. We have to do that in kind of a methodical, prioritized approach. So we're starting with Bitcoin, but certainly as we look to other asset classes, we're going to add and support assets that have blockchains that are scalable, showing good promise, with a lot of customer interest, to be able to provide kind of a product that meets any customer's expectation.
Yeah, I think wallet management or maintenance gets underappreciated if you've never actually lived in that world, right? You're talking about native software that gets probably updated every few months, and it's still version 0.1 or something like that. Then you deal with forks, then you deal with airdrops, and I mean, the amount of work that goes into managing a wallet, it's not just, hey, we'll download this thing, we'll have the assets live there. It's hands-on management of what's going on. It is definitely difficult.
That's right, and we acquired a company called Digital Asset Custody Co. about 6 months ago, and I think a lot of people thought, they somehow connected the dots that we bought DACC, which is about a dozen engineers based here in New York, to somehow use their custody product. And while they built an incredible crypto custodian, one that was connected to like 13 blockchains and had tons of different tokens support, we didn't. We really bought them to accelerate our efforts to expand and grow the custodian we'd already built in-house over the course of those 2 years. So I certainly thought with the DACC acquisition, the crypto press and people would have said, oh wow, you're going to add a whole bunch of new tokens because you just acquired a team that has experience having basically connectivity to more blockchains than anyone else in the space, including very kind of cutting edge, nascent blockchains. And that is true. Now, the way in which we do that over time is certainly going to move at a pace and a speed that we're comfortable with, but that acquisition and that talent, that team we brought in-house, really starts to develop a core competency of adding new assets.
How do you think about the difference between institutional and retail? So today you're predominantly an institutional product, but with big plans to expand into retail. How do you think about those relative market sizes and prioritizing resources internally?
It's a great question. So I think if Bakkt were only building a custodian to allow futures trading and maybe trading on other exchanges, it wouldn't have been called Bakkt. It would have been, I don't know, part of ICE. But Jeff Sprecher and Kelly Loeffler, our CEO, I think recognize the vision that we can't just allow trading and speculation. We have to build those utility products. And where that utility is generally going to be driven from is what we believe is both on institutions, in this sense businesses, but also the retail consumer side. But that is not something ICE has experience with. ICE is not a retail consumer, driven product. They're used to dealing with, I don't know, maybe 1,000 customers around the world, large institutions that have very different needs than my cousin who may be using our app next year. So this is why we created Bakkt as a separate company with a separate board. This is why we're out there getting 48 state-level money transmitter licenses. This is why we brought in Mike Blandina, our payments executive, and a whole team that he brought over. It's because we recognize there's a very big difference serving institutions than there are retail. And at Bakkt, we've built at our core a custodian. And I put out a blog post about this, I don't know, maybe 3-4 months ago, titled Custody at Our Core. And we said, look, no matter what we want to do, whether it's allowing institutions to trade and allow price discovery to occur, or whether it's building a mass retail consumer application, the safe, secure custody of digital assets is foundational to that. Now, the safe, secure custody of a digital asset, if it's a fiat currency or a loyalty point or a security, isn't that hard because those databases tend to be private and you don't deal with kind of the risks that you do with crypto. But by including cryptocurrency in this kind of retail consumer app we're building, we had to build our own custodian. So I would say that the core foundation of the product we've built is largely the same. The way in which we're packaging those pieces together to offer a product is a bit different. And I've heard someone else use this term. It's like, we're kind of like Taco Bell. We've got the same 5 ingredients, but we mix and match them in a bunch of different ways to give you a chalupa or a taco or a burrito. I think a bit about Bakkt like that. We've got the same foundational handful of components. We're just packaging it up and offering it in a different way to serve a different customer.
Yeah, hey, Adam, can you talk about the biggest blind spot or lesson learned from your time at Coinbase that kind of carries over into your world now, and how you've kind of implemented that blind spot, something you didn't see that over those 5 years that you've learned?
It's a great question. I'll share a pro and a con. So one thing that I learned that I think Coinbase did incredibly well is it took 3 things very, very seriously. And all credit goes to Brian Armstrong and Fred Urshan, the co-founders. They took compliance, security, and culture more important than anything else. So obviously compliance, because you have to get banking partners, and this is kind of an unclear space. You have to do the right thing even when the rules aren't that clear. So being kind of compliant first. Obviously security is important, understanding that there are no go-backs in crypto. A lot of crypto custodians have insurance, but the amount of insurance they have might be 2 or 3% of the assets under custody. So it doesn't provide, FDIC-like or SIPC-like insurance where customers can be made whole. So you have one hacking, you kind of forever lose the trust of your customers. But the third one I think is really important, and a lot of people, and I myself would have underinvested in. It's that very conscious ability to try to create and manage the culture that you want. So things like putting real time and effort into creating a mission, not just kind of throwing one together that feels very bland and everyone disregards, and coming up with kind of cultural values. So you have this very objective rubric that you're looking for how everyone operates and acts. And what that allows you to do is create a very diverse team that's inclusive, people from different backgrounds, different careers. Part of the reason I wound up at Coinbase as a military guy is that Brian and Fred weren't looking for someone that had worked in the crypto space for 5 years. That didn't exist back in 2013. They were looking for someone that kind of had core attributes and values that they wanted to build the company around. So when I joined Bakkt, I think I was employee 2 or 3, I spent a lot of time with Kelly Loeffler, the CEO, trying to say, what's the culture we want to build? What are the values that we want to instill, and how that kind of drives our hiring strategy? The kind of flip side, something that I think, having left Coinbase, that I would maybe do differently or I've learned from, I would say that cultural piece you can't stop investing in. So what was such an incredible part of the ride at Coinbase is I was employee number 5. I literally brought my own laptop to work for the first couple months, and we were in a 1-bedroom apartment, and I was, tapping Olaf on the shoulder, who's the founder of Polychain Capital, to say, hey, can you help me answer this question? It was a very informal environment. I felt like I was doing a school project. By the time I left, I think Coinbase was over 500 people, offices around the world, people, geographically separated, working on a dozen different products. And when you start to add in all those kind of complicating factors of multiple geographies, multiple products, hyperscale, you have to almost overinvest in the culture and make sure that as you're onboarding new employees, not just the rank and file employees, but also new executives, that you don't underinvest in the time of helping people adjust to the culture you want to set. And when that culture is not being met, very consciously saying, look, whether you're a brand new junior engineer or you're a C-level executive, as the founder of that company, making sure you still kind of hold that cultural bar consistent for everyone. That's something that's really hard to do when your business is kind of expanding and growing so quickly. And I think we spent a lot of time at Bakkt thinking that we're going to stay lean and small, but as we start to grow, how do we make sure we don't underinvest in that piece?
I think we have time for one more question.
How do you price your products?
Well, on the futures market, obviously we don't price Bitcoin. It's the open market discovering the fair price of Bitcoin, which I think is fascinating. We charge for the exchange and clearing and delivery of our contracts pretty much in line with every other contract that's traded on ICE. So ICE kind of sets those fees because they're being traded on their exchange. So what I think the kind of takeaway there is we price it like every other futures contract. There's nothing really kind of different or novel about it. When we look to the consumer and that payments product that's launching next year, I can't talk specifically around that, but the way in which we try to think about it is that we should be charging kind of based on the value we're providing to customers. So you want to make your product easy to access, easy to use, and then as customers become more engaged and involved and are accessing, more advanced features, that you charge accordingly for that. So for example, on our custody product, we haven't come out publicly with our fee structure, but we're doing something a bit different than others in the space. The current kind of fee schedule for most custodians is based on assets under custody. And when you really look at the service you're providing for storing someone's assets, whether they're storing 1 Bitcoin with you or $1 billion of Bitcoin, once those funds are kind of safely stored away, there's really not much incremental cost. It's data, it's ones and zeros, it's bits and bytes. So what we're trying to do is make sure that we align our fee schedule such that we're promoting the activity we want to see from our customers and making sure that we're not charging with a fee schedule that promotes activity that we don't think aligns our interest with our customers. And we'll have more to say about that next week too.
I think price discovery is an important point as well in terms of you have dozens, if not hundreds, of different prices of Bitcoin. I remember at DRW we had to create our own theoretical value of what Bitcoin was, or every single coin that we trade, because our addressable market was different. But I think when you have bona fide institutions that come into the market, they look for that central point of price discovery, and hopefully that's something you guys are looking at.
Yeah, something we consciously say and continuously say around the market is we want to become the benchmark price of Bitcoin. We want, when people go, what's the price of Bitcoin? They're not looking at a composite index that's across a number of unregulated spot markets. They're not looking to cash settled contracts. They're actually looking at physical delivered Bitcoin on a fully regulated marketplace. And that's not going to happen until we start to really see increased trading volumes and something that represents that we're leading price discovery, not following it. But what's I think so important about our air-gapped marketplace is that we have the potential to kind of lead price discovery and become that benchmark price for Bitcoin. That's what Jeff Sprecher talks about all the time, and something that we as a team at Bakkt think a lot about.
Awesome.